So at the start, let us discuss the current position of the crude oil industry, how it is today. It is facing its deepest downturn since the 1990s. Company profits have slipped massively from record high levels. In the US alone, two-thirds of their rigs have been decommissioned and 250,000 people have been laid off and fired from their jobs. New investments and explorations have been stopped or abandoned. Many companies have gone bust. Approximately, the world, so uh, these are five impacts which have occurred in the oil industry today. This is the current position of the crude oil industry. And the last point which is there on this slide, approximately the world's production and the world's consumption of crude oil is presently hovering around 93 million barrels per day. Okay. So I would like you all to remember this number, that the production and consumption oscillates around 93 million barrels per day. Because this number will be used a lot of time in today's presentation and it will be good if you remember. So we've discussed the current scenario of the oil industry. Now let's go back into a flashback. What happened that led to this scenario? What was the trigger to the fall? Okay. So to begin with, in 2005, US oil consumption had peaked along with the consumption of many other nations. This means that US, okay, I got a feedback saying I'm not audible. Is it so? Am I audible? Yes or no? Okay, I'm audible. In 2005, between 2000 and 2005, a lot of countries had become major consumers of crude oil, US being one of them. And in 2005, the US oil consumption reached its highest point. After 2005, the US oil consumption started dropping a bit. Now, why did that happen? Because in 2005, the US government, they passed an energy policy act, and in 2007, they also added another Energy Independence and Security Act. Because of these are demand destruction techniques which the US government employed so that the US oil consumption could come to a halt or it would stop increasing. Okay. And what was the result of these two policies? That between 2005 and 2014, the US oil consumption declined by more than 2 million barrels per day. That is by almost 12% of their consumption in 2005. So US oil consumption declined by more than 2 million barrels per day. Currently, we know that the overall global consumption revolves around 93 million barrels per day. That means that the global consumption, approximately 3 to 4% of the consumption was reduced over a span of 7 years, over a span of 9 years. Okay. Then there was the birth of shale oil, as our friend pointed out, which raised the US production of oil by from 5 million barrels per day in 2005 to 8.5 million barrels per day in 2014 and 9 million barrels per day in 2015. So now there was a double whammy. There was a double whammy in the sense that not only did US consumption reduce, but US domestic production increased. So the amount of oil US was buying from other countries reduced in two factors, by its own production and its reduced in demand. Okay. Here's a chart which shows the US domestic shale oil production. This chart only shows the production in the North Dakota region. Okay, this is one of US's major uh, shale oil producing regions, and it is located at the top of the northern boundary of United States. So it's at the boundary of USA and Canada, and it's located at the northern boundary. So it's very cold there. And this graph shows you the kind of rise which happened during the period of 2005 till 2014 in the US shale oil production. So having said this, like I said, that the countries from which US was importing its oil received a double blow. So Saudi Arabia being one of them. Since US was its largest customer, decline in the US consumption and increase in the US domestic production led Saudi Arabia to start competing for selling oil to Asian markets. Now, since Saudi's largest customer was taking less oil from them, Saudi had to sell oil to other markets. So now Saudi had to compete with other nations to start selling its oil to the Asian market. Until 2014, Saudi had tried controlling the oil prices with unrest gimmickry in the Gulf region. In 2014, with Libya's, so until 2014, what happened was that Saudi would cause an unrest in the neighboring states, and because of those unrest or some civil wars or some riots which it would cause in its neighboring states or in some country, because of that, that country would produce less oil, which would lead to less oil supply globally, and Saudi would get to sell more of its oil at that price, and the oil price would also hike because of that. So Saudi tried controlling the oil prices with such unrest gimmickry by causing unrest in other countries. Now in 2014, what happened was Libya, which was one such country which was plagued with this unrest. I again got a feedback that I'm not audible. Can you please tell me if I'm audible? I'm not audible. Hello, hello. Okay, am I audible now? Yes. Okay. Now, where was I? So Libya was one such country which was plagued with unrest, and there was civil riots going on in Libya. In 2000 and the riots in Libya had reached such a level that in 2013 Libya's oil production came to a grinding halt, and Libya's exports had also oil exports had also almost stopped. Now Libyan economy is very highly dependent on oil exports, without which its economy would not function. So eventually in 2014, Libya's ports and oil fields reopened, and also US allowed Iraqi oil exports to resume. And this, because of these two countries which are two big oil producers, their supply started hitting the market. Saudi could no longer control the prices like they had for all these years. Saudi could no longer, any amount of unrest which Saudi would try causing would now not stop Libya and Iraq from selling their oil. So Saudi's control over the oil prices diluted. By September 2014, now before I continue, just see this chart. This chart in this chart, the green section, the green area, it shows the positions of the hedge funds which had taken, this chart shows the cumulative position of hedge funds in the WTI futures market. So there's WTI crude, West Texas Intermediate crude oil, which gets traded, futures of that gets traded. And here you can see that between Jan to July 2014, hedge funds had built a lot of positions in crude oil futures. Now the question is, why did the hedge fund build up so much position in crude oil futures? Because there was unrest in Libya, and Libyan oil exports had almost dropped down to nil. So these hedge funds were anticipating that because Libyan exports were not going in the market, the price of crude oil would soar up and it would continue going up. That is why these guys built up really large long futures positions in the market. But as soon as July 2014 happened, these fund managers, they started realizing that the Libyan oil is starting to hit the market. Their oil fields have resumed, and soon their ports will reopen. And because of this, um, they started anticipating that now the oil production, since it's resuming, the oil prices will again start falling because the supply would come back in the market. And they started slashing their position. From July, they started slashing their positions. By September 2014, fund managers slashed their positions in the Brent and in the West Texas by almost 60%. That is by 400 million barrels. That is triggering a, now this slash in position triggered a price fall in the Brent market. And the source of this graph is Thomson Reuters. It's taken from a report published by Thomson Reuters. So, do you understand the first trigger of why the crude oil market crashed? The first trigger is that Libyan oil started hitting the market. Iraqi oil was expected to start hitting the market soon. And because of that, hedge funds started slashing their positions. And that triggered a fall in the WTI and Brent crude prices. Okay. This was the first trigger. And then the final arm twist. Okay, you can read this. This is just what I mentioned. It's just for your reading purpose. So the slashing of positions, futures market positions by fund managers was the first trigger of the fall in crude prices. And then there was the final arm twist, which was given by Saudi itself. Now what happened is that when the crude oil prices started falling this time round, okay, I've got a question. How do the closing positions in derivative market affect the price and underlying? So there is a lot of arbitrage which takes place between the spot and derivative prices. So for people who are owning crude warehouses, for companies which are selling crude, they always hedge their positions in the derivative markets. And because of so if there's any price gap which is there between the spot and the futures market, apart from the calculated price gap of the storage cost and the interest cost, if there's any other price gap, then the markets will always try to arbitrage that position and they will try to bring down the gap. And because of arbitrage position, what happened is that the derivative market slid down as these positions were being squared off, and because the derivative market slid down, the underlying price had to fall too. So at this point in time, Saudi Arabia had a choice. They had to choose between keeping the prices artificially high, that is by causing further unrest in few other countries, which would have proven costly for them since Libya and Iraq were just starting to produce oil after a long halt, so they would produce substantial amount of oil anyways. So apart from Libya and Iraq, they would have to cause unrest in some other country in order to affect the prices. Or the second choice which they had was to let the crude prices decline. Now, why was this a choice? Why would Saudi let the Saudi, which was the largest, which still is the largest exporter of crude oil in the world, why would Saudi let the crude oil prices decline? Could any of y'all tell me that? Why would Saudi itself consider letting the crude oil prices decline? Anyone? Okay, I don't think anyone is replying. To increase the supply, but why would they increase the supply? One person gave the right answer to compete with shale oil. That is the right answer. Like I said, that now since US has become has started consuming less oil, Saudi had to compete with other producers for the Asian market share. Right now, because of the Asian market share, uh, because of the shale oil producers, they shale oil producers had quite a lot of market share in the Asian subcontinent, and uh, shale oil gets produced typically at $55 per barrel, and crude oil gets produced at around $20 per barrel. So what Saudi thought was that if crude prices decline below $55 per barrel, these shale oil producers will have to stop their production or they will incur a loss. And then we would be the one supplying crude oil to the Asian market space. So what Saudi did was Saudi let the prices decline to curb the investment in the shale oil space. And to do that, OPEC alone decided to produce 30 million barrels per day. Now, how much was the how much is the daily global consumption, which we discussed in the start? How many barrels per day gets consumed daily as of today? We discussed this in the start. 93, right? So if OPEC were to produce, no, it is 93 million barrels per day, by the way. So if OPEC were to produce 30 million barrels per day, that is almost 33% of the global consumption. And because of which Saudi added fuel to the fire when the prices started falling because of the hedge fund managers slashing their position. Saudi beefed up its supply and you know arm twisted those people more and caused a greater fall in the crude prices. Now, as crude prices declined below $55 per barrel, shale oil production could not be supported by the price, as a result of which shale companies started to idle their rigs and laying off people. Now, this brings us to the start of the presentation where I showed you the current scenario. In USA alone, 550 rigs, that is almost 12% of the rigs which they have in the US, have been isolated because crude fell below $55 per barrel. Bringing us back to, to our first slide, that since 550 rigs have been isolated, this is the current present scenario of the crude oil industry. Okay, this was just about the trigger to the fall of this. All these things which I discussed right now, they just triggered a fall in the crude price. Saudi just intended to fall below $55 per barrel. But what eventually happened was that crude fell below $30 per barrel. Presently it's around $38 to $40 per barrel. But Saudi had not intended it to fall that much too. Because if Saudi is producing crude at $20 per barrel and at $30 per barrel, they are not even getting enough margin to support themselves. But why did this happen? So after the trigger to the fall, let us move on to other reasons for the crash. Um, I've got a question. Cost of crude is same for Saudi and US. Can you give me some figures? What will happen if prices again rise above $55 per barrel? Okay, there are two questions. Firstly, crude gets extracted and the cost of extraction for crude world over is around 20 to 22, $23 per barrel. Okay, even for our very own ONGC, it is the same. For Reliance Industries also, uh, oil extraction is the same price, and that is because the technology is such that the costing gets worked out at around those prices. Okay, and similarly, the cost for getting shale oil is around $55 per barrel. And about what will happen if prices rise above $55 per barrel, I will cover that question in the later part of the presentation where we discuss the future of crude oil from now. Okay. So where was I? I was telling you about the other reasons for the crash. So Saudi just triggered an arm twisted crude prices to fall further, but there were several other reasons which fueled the crash. Okay, one of them, as mentioned here, is that not only Saudi but Nigeria, Algeria, and UAE, all these countries used to sell oil to the US. So not only Saudi but all these countries had to now compete for the Asian market. Also, Canada, Libya, and Iraqi oil production was rising every year. In fact, Canada and Mexico are building new projects even today for producing oil. They are not stopping themselves from producing oil even though the oil prices are low and the potential profitability is low. Now why is that? Because these projects are very capital intensive projects. So if Mexico and Canada have gone halfway into building these projects, they would have the choice that A, we either abandon these projects or B, we go through with these projects. So Canada and Mexico are those few people who are continuing their new oil projects which they have commissioned, and their oil production is rising every year as we speak. Also another reason is Canada, Libya and Iraqi oil production also, okay, no, that's the reason which I discussed. Another reason is this. Russia and North Dakota are two regions which constantly need to keep pumping oil. Now, why is it so? Why does Russia and North Dakota constantly need to keep pumping oil? Have you all come across this anywhere? Okay, you all are not even answering yes or no. Okay. So now what happens is Russian oil comes from the Siberian region. If they close the rigs, if they if they were to stop their oil production and if they were to let the rigs be shut down for a few days, then those rigs will freeze. And then to start the rigs again, they would have to incur a very big cost. And it is for this reason that Russia needs to keep on constantly pumping oil. They cannot stop their oil production. Their rigs will freeze. Now, North Dakota, which is located on the northern boundary, northern tip of the US, is in the same position, in the same situation where even North Dakota cannot stop producing its shale oil, otherwise their rigs will freeze. In fact, there were articles on the internet about negative crude oil prices in the Dakota region, where there's an acute shortage of storage space of the crude oil which is being produced there. And a businessman out there offered someone money to take away crude from his warehouse. So this is the kind of situation which is developing in such regions where the demand has gone down, but the production does not stop, and there is a supply glut. Okay, Venezuela and Algeria are again two countries whose economies are heavily dependent on oil. So they cannot stop or reduce their oil production because they need to pay wages to their people. So again, this led to extra oversupply of oil. Okay. So on the supply side, there were two or three other reasons which fueled the oil crash. First one was Canada and Mexico building new projects, and Libya and Iraqi oil production also rising every year. Second one is Russia and North Dakota cannot stop producing oil because otherwise the oil rigs will freeze. Third one is Venezuela and Algeria also cannot stop producing oil because they need to feed their workers, and their population and their economy and population is heavily dependent on oil production. So on the supply side, there were these three factors. On the demand side, Europe and other developing countries' economies became weak. So their industrial oil consumption reduced. Again, vehicles are becoming more and more fuel efficient every year. So between 2005 to 2015, we saw Euro stage 3 and stage 4 getting implemented. Again, why is this an important factor? Because when you want to check the use of crude oil, the major use of crude oil comes in transportation. So if vehicles are becoming more fuel efficient, you cannot ignore that reason. That is a very, very large reason which triggers a fall in demand of crude oil. And thirdly, there was an economic backfire which led to low demand of crude oil. What is economic backfire is something which we'll cover in tremendous detail just after this section. Okay. There's one more argument which people say. You might argue that what about the production drop due to the shutdown? So if 550 rigs in the US have shut down, there will be some kind of a drop in the US production, which should also reduce the supply of the crude oil in the market. This is a fair argument, but there are three points which are the reason why this argument is not valid. That is that there have been a shutdown of projects worth 380 billion, but halting the production and this has halted the production of approximately 2.9 million barrels per day, which is again around 3 to 3.5% of the world's daily consumption of crude oil. OPEC has shelved projects capable of 0.5 million barrels per day, but this fall in the supply of crude oil is not enough because Mexico and Canada have been adding projects, adding oil supply production, and so have Libya and Iraq. And that is why you can see that the drop in the crude oil production is not enough to cause any kind of a halt in the crash of crude oil prices. So these were the other factors which led to crude oil prices falling further even beyond levels anticipated by the Saudi people. Okay. So far, is it clear? Is it clear so far? Yes. Okay. I've got a few questions here. Are other countries in OPEC favor of uh, the soaring crude oil price, and why low crude prices mean less than 40 to 50 barrels is not good for the Indian economy? Prasad, I'll answer this question in the later part of my presentation. And as for other countries of OPEC, well, OPEC as a body itself decided that uh, they will beef up the supply of crude oil, because OPEC in general, major OPEC players wanted to increase the Asian market share, and shale oil was hurting their business a lot. Okay. Now have a look at this graph. This graph shows the difference between the demand and supply of crude oil. Okay, and you can see that they are almost neck to neck since the last 16 years. The demand has never been above the supply for a long, uh, the supply has never been above the demand for a very large period of time. Okay, let me again check if I am audible. Please write yes or no whether I am audible or not. Okay, the consensus is that I am audible, so I'll continue. So in this chart, you can see that the supply never outstripped the demand for a long period of time. The demand has in general been higher than the supply, except for a few months here and there where the supply has gone above the demand. But towards the end of this chart, if you were to see, after 2014, the supply has outstripped the demand, beat by a small margin, but supply did not go below the demand for quite a long time. In fact, even today, the supply is not above the demand, and this has never happened before. So the amount of time that the supply has been above the demand since 2014 has never happened before. Can you see from the chart? Is it clear? Is it clear, everyone? Can you see that the demand and supply are neck to neck, and since 2014, it is the first time that the supply is outstripping the demand for a elongated period of time? Okay. So now let us go to the next section called the economic backfire due to crude oil prices. Just 1 minute. Just there's some commotion. Just let me just ask people to. Okay. Sorry for the interruption. Let's proceed. Let us continue with economic backfire. What exactly do I mean by economic backfire? firstly, so this question came up on Twitter. One old economist was asking the new economist that earlier between the 1980s till the 2000s, low crude oil prices supported the world growth. So if you were to see the historic GDP charts of many countries, their GDP expanded maximum between the mid 1980s till the 2000s, especially the developed countries. So if you were to check the US GDP, the European GDP, UK, etc., their GDP expanded maximum between the mid 1980s till the early 2000s. Okay, why? This exponential rise in their GDP at that time was attributed to low crude oil prices, which supported the world growth then. So that economist is saying that why is it different this time? Why is the low crude oil prices this time a hindrance to the GDP and not helping the GDP of the world? Shouldn't the GDP of countries grow up if the crude oil prices were to go down just like it did historically? So now to answer this question, we need to discuss the impact of the low crude oil prices country-wide. Okay, starting with the United States of America. The US has many large oil corporations which made record profits before the crisis. The oil industry in the US is one of the richest lobby in the US. In fact, can you tell me which is the most expensive place to live in the US? Which US city has the highest real estate prices? Come on. I got one answer, New York. No, it is not New York. Can you all tell me which city in the US? Okay, I'll give you the answer. Answer is Houston. Houston real estate is amongst the costliest in the entire USA. And the reason is that the Houston region is a region where the largest oil corporations of the US have their head office. Okay. These largest oil corporations of the United States were those the same companies which were producing record profits before the crude oil crash. These companies were their profits, their results were coming at record levels before this oil crisis began. Now, why is it so? The oil industry in the US is one of the most capital intensive industry in the world. Okay, not only in the US but anywhere in the world, the oil industry is the most capital intensive industry. Okay, and a lot of these corporations had borrowed large sums of money for the purpose of carrying out new exploration, drilling, and extraction of shale oil. Now, as a result of this, as mentioned, a lot of these rigs have come to a grinding halt, and this has led to a lot of credit in the US economy going back. Okay, so over the last 2 years or 3 years, a lot of rigs of the US have been decommissioned. A lot of these oil corporations have made huge losses because the shale oil prices are not helping them to sustain their business. Okay, am I audible again? Am I audible? I got a feedback that my voice is not audible. Just 1 minute. Okay, now am I audible? Yes? Okay, let's continue. So, a lot of these oil corporations had borrowed large sums of money for the purpose of carrying out new exploration, drilling and extracting shale oil. And a lot of these rigs have now come to a halt, which has led to a lot of credit in the US economy going bad. Thus, as we see that because of low crude oil prices, this time round, the US banking industry gets directly affected. Apart from the bad loans, the bankers have very few takers for new loans also, as these oil corporations were amongst the largest borrowers who are not willing to carry out any further capital expenditure at present. So their new loans are also not selling for the US bank. Moreover, since there has been quantitative easing since the last 7 years, the US corporations uh, replaced their bad loans with more loans, and this has led to uh, overexposure of the US corporations in this crude oil market. Also, many people who are employed in the US oil industry, for them, the recent layoffs have sparked a demand curbing, thereby reducing the overall demand for goods in the economy as well as directly reducing the GDP of the US economy. So if you were to hear what Janet Yellen talks every month in her meeting, she says that we expect the inflation to be around 2%. However, due to low crude oil prices, the inflation is not going above 0.25%. And if crude oil prices were to rise again, we expect inflation to reach its normal level around 2%. And there is nothing wrong with the US economy. Contrary to what she says, this is what has actually been happening. This is the backdrop of the crude oil prices, what has happened in the US economy. So, 250,000 people getting laid off. Obviously, they will spend less. Obviously, there will be a general reduction in demand for goods in the US, and this directly affects the US GDP at some level. Like I said, 7 years of quantitative easing has led to corporations being over-leveraged in the cheap money period with loans, bonds, and derivatives. We saw how hedge fund derivative positions triggered the crash. Imagine what would have happened to the derivative positions of these large corporations once the oil prices would have crashed. Also, uh, yes, so this is basically the summary of what happened in the US, how it backfired this time for them, that the low crude oil prices actually hindering their economy. So is the economic backfire which took place in the US clear? Is it clear as to why this time the low crude oil prices is actually hampering the US economy? Alright then. Let's move on to Saudi Arabia. Saudi responded, as we have discussed, that Saudi responded to the rise of US shale oil producers and other non-OPEC shale oil producers and non-OPEC oil sources, which threatened to push it out of the market such as the US by abandoning a decade-old policy. Instead of cutting the production to support oil prices, it allowed the oil prices to slide in order to eliminate higher cost producers. Right? This we have discussed. That that Saudi let the prices fall so that the higher cost producers would get eliminated. Now this strategy has left it in a test of will, and Saudi now needs to withstand the pain of low oil prices longer than the higher cost producers can stay in the business. So it has become a race between Saudi and the other countries. By Saudi I mean OPEC. But here I'm talking about Saudi in particular. It has become a race between the Saudi and other countries who can withstand the pain of low profit margins for a longer time. Okay. So why am I saying it a pain? Because Saudi government relies a lot on oil export revenues for about 90% of its income. So Saudi, 90% of its income comes from oil export revenue. And low oil prices are causing a serious damage to the Saudi budget. So in December, the Saudi government projected a record budget deficit of 38.7 billion for 2015, over 5% of the GDP that is. And analysts estimate that when they had made this budget estimate, they had considered an average oil price of about $60 per barrel. So if oil stays below that, their deficit is going to go even larger. I've got a question. Someone's asking, does Saudi Arabia forex reserve could be another reason Saudi is holding the price low? Yes. According to the finance minister of Saudi Arabia, they have got a lot of forex reserve, and the financial resources built up over the years when the oil prices were sky high will keep the Saudi economy chugging along even at the low oil prices. So at one level, what our friend Mr. Ashish is asking is correct, that the high forex reserve is providing some kind of a cushion to Saudi Arabia to hold the prices low as compared to other countries. Okay. Now, the finance minister of Saudi Arabia, Mr. Ibrahim Al-Asaf, has declared that Saudi Arabia will run a counter-cyclical fiscal policy where it will use its reserves to maintain the heavy expenditure which they have planned on infrastructure and welfare projects in order to offset any negative impact from cheap oil. Now, the Saudi government is still trying to paint a rosy picture, and they are saying that this year's GDP, like Saudi GDP, will grow by 3.2% despite of their revenue source being impacted so badly. Now, it is for you guys and all of us to think that if 90% of your income is coming from one source, and that income has been slashed to one third, and you are still estimating that your GDP will grow by 3.2% this year, what are you trying to say? Okay. Also, uh, so there are two schools of thought. One school of thought believes that the Saudi finance minister is right, and that the Saudi will be able to maintain this, will be able to survive the low crude oil prices for the longest period in time because of the reserves that they have built over the years when crude has been trading above 100. Okay. Because of all those benefits, Saudi will be able to win the race. That is what one school of thought is saying. The other school of thought is questioning that if 90% of the income is coming from one source, and if that source becomes straight away one third, the crude oil price straight away became one third, then how do you even expect the GDP to be positive? Okay. So keep these two schools of thought in mind. We will come to this discussion later. Okay. We have one friend who is saying that I've heard that Saudi Arabia is intentionally dropping the price to gain market share. They were making a trade-off between current profit and future market share. Your views on this? If you are listening, this is exactly what I'm trying to tell you, that Saudi has let the prices fall so that the shale oil operators get out of the business, and the Saudi then get their share of the market. So your question is exactly everything that I've discussed so far. I suggest that you start paying more attention. Also, as shown in the graph, for the last few years, demand is more than supply. What can be the reason, and is it sustainable? My friend, the graph shows that the supply is more than the demand for the last few years. You have seen the graph wrong. I've put it here for a benefit. The dark blue line is way above that light blue line. Okay. Yeah, for 14 and 15, the dark blue line is the supply line, and it is above the demand line. The supply is outstripping the demand. When the demand is greater than supply, the price of substitutes will fall. Why is it so? If demand is great, the price of substitutes will sustain, right? Because then if crude oil demand is more and there's less supply, people will have to use the substitute. Okay, so is the economic backfire in Saudi clear? We end the economic backfire of Saudi with two schools of thought. One which believe what the finance minister is saying, and one who have a completely opposite view, or that the Saudi GDP will be impacted in a negative fashion because of the fall in crude oil price. Are we clear? Are we on the same page? Alright. So now we move on to the third biggest player which is there in our game today, which we haven't discussed much, and that is Russia. The halving of oil prices since last summer has thrown Russia into a full-blown economic crisis. Now, why is that so? Oil and gas account for around 70% of Russia's export, of which it 4/5 come from crude oil or petroleum products, and the rest comes from natural gas, the price of which is linked to crude oil. Okay, so Russia, like Saudi's 90% income comes from crude oil export. Russia's 70% income comes from crude oil export, right? So crude oil and NG export. Okay. Now the rising, that is one thing. Another thing is that since because of this, the Russian ruble prices have crashed. Okay. Since Russia's income got hit really badly, the prices of the Russian ruble has crashed. Now this crash in Russian currency has provided a cushion to Russia, so to say, because rising crash in the ruble means that the Russian imports get costlier, and the rising import prices mean that the Russian inflation almost doubled last year to 11.4%. Okay. Now, what has China been doing with the yuan to beef its exports recently? Can you tell me that recently what has China done to the yuan in order to support its export? Only 1% is that. Okay, devalue, right. So China has artificially devalued the yuan on a number of occasions last year to beef its export. So now when we are talking about Russia, whose ruble got devalued automatically without doing anything, its export would have got a cushion, correct? And its imports became expensive. So because of this, statistics suggest that Russian imports became half the previous year's value, and Russian exports continued at a devalued ruble rate. Okay, so that is one thing. Keep that in mind. Also, the ruble crash has sparked an inflation in Russia. The inflation in Russia almost became double last year to 11.4%. And the central bank has raised the lending rate last year at one point to almost 17%. Okay. The IMF suggests that the Russian economy will contract by 3% this year. That is the only official number that we have obtained regarding the Russian economy. The IMF, now there's one more thing, that since the year 2000, the Russian government had increased its spending so much that the Russian federal budget of expenditure in 2007, it was balancing at a crude oil price of $40 per barrel. So Russia had planned its expenditure in such a way that the income that it would obtain from crude oil exports, had crude oil been $40 per barrel, then the budget would be balanced. Same way in 2015, the Russian budget had assumed the crude oil price to be around $80 per barrel in order to balance their federal budget. But now, since the oil price is less than half of that, the Russian federal budget has gone into a topsy-turvy, and we don't know the exact impact it will have on the Russian economy. So we have only one number to go by, that is the IMF forecast, which suggests that the Russian GDP will contract by 3% this year. So here again, this gives us food for thought that 90% of Saudi's income comes from oil export. 70% of Russia's income comes from oil and natural gas import. So who is more exposed to crude oil? Can you answer who is more exposed to crude oil prices? Is it Russia or is it Saudi? How is it Russia if Saudi gains 90% of its income from crude oil export and Russia gains close to 70% from crude oil export? Saudi has a larger exposure. I'm just talking from a Saudi point of view, exposure point of view. So when Saudi says that the Saudi GDP will grow by 3% and Russian GDP is expected to contract by 3%, isn't this a big contradiction that we have in front of us? So these are the questions that we need to search for an answer in the days to come. But have you understood the economic backfire that Russia faced because of the low crude oil prices? Russian ruble got devalued, inflation doubled up, the imports got halved, their exports got a cushion, but their budget spending got in a topsy-turvy because their budget planning was done at a crude price of $80 per barrel. Okay, okay, that is one thing. Now coming to the next question, does Russia have forex reserves like Saudi? Russia does not have forex reserves like Saudi, which is why its economy has gone into a full-fledged crisis. But when I'm considering from an purely exposure point of view, then the whole story is different. And how much reserves do Saudi have actually is something that is not a clear part at all. And we'll discuss this in the later, a little while later. Okay. So the Russian economic backfire is clear now. The role of ban on doing trade with Russia didn't have any role. No, it did not have any role. Aren't we ignoring the break-even point of Russia? What is it increasing? So the break-even point of Russia is $80 per barrel as per this fiscal budget. So they are already in a topsy-turvy. We are considering that. We are considering that the Russia is in a full-fledged economic crisis. But for Saudi, we have two schools of thought. One school which believes what the finance minister is saying, and one school of thought which is saying that no, it may not be the case. The picture is still not clear. Have you understood the economic backfire in Russia? Okay. Now other economies, coming to other economies, Norway again in December 2015 declared that it has entered, oil industry of Norway has entered a full-fledged crisis. A lot of people lost their jobs, and even Norway is hoping that a currency devaluation that happened in the ruble, something like that should happen to the Norwegian currency too, to help the exports and provide a cushion to the economy. Okay. Similarly, Iraq, Afghanistan and Syria also are badly affected, just as Russia is with the low crude oil prices. Iraq just recently started exporting crude oil, so the low prices are already obviously going to impact them real bad. Afghanistan and Syria were always in a controversial state, so this, and they are also dependent on crude oil, so even they have been affected adversely because of that. So this was the economic backfire on other economies because of the low crude oil price, right? Have you got it? Is the economic backfire clear now as to why earlier the low crude oil prices was good for many countries, but now the low crude oil prices is hampering many countries, the same countries in fact. Alright, so this chart, it shows the historic level of crude oil. To determine the way ahead as to what is the possible way ahead for crude oil, we need to study this chart. You can see that the first surge in crude oil prices occurred in 1970. Okay, it's written there, the Arab oil embargo. That is what caused the first surge in crude oil prices. Now, this also coincided with the US recession of the 70s. Okay, and this primarily happened because in the 70s OPEC was formed and those guys created an oligopoly and drove up crude oil prices. Now in the 80s, then later as you can see, Iran-Iraq war started and then the crude oil prices started falling. Why? Because as the fall occurred between 1980 and 1985, there was growing distrust amongst the OPEC nations and their cooperation which they had formed in the 1970s, the cooperation broke, the oligopoly broke and crude oil prices slumped. Okay. Now this slump in crude oil prices continued from around 1990 till the year 2000, 1985 till the year 2000, for 15 years. And for these 15 years, OPEC was a practically useless organization because those countries never trusted each other. Okay. And it is during these same 15 years that the GDP of several developed nations skyrocket. Top OPEC producers are Saudi, UAE, and Iran, and they are not getting along well with each other due to religious differences. Venezuela and Nigeria are quite desperate, and OPEC was almost dead for around 20 years between 1985 to 2005. After that, you can see between 2002 or 2003 onwards, there has been a one-sided surge in crude oil prices. Now, that happened due to the rise in Chinese consumption. China had become a major guzzler for crude oil. So while the US crude oil consumption peaked in 2005, China had just started. And the Chinese crude oil consumption party continued until 2008. Okay. So the surge that followed. Okay. The surge that follows after 2003 occurred due to the Chinese consumption party which happened. And the crash of 2008 signaled an end to the party of Chinese consumption. Chinese growth would continue, but it would not continue at double-digit levels, not at 10% and above as it had done earlier. Now after 2008, as you see, China has been growing, but not at double digits. That's growing at around 7-8%, etc. So when we are thinking about the way ahead as to what will the crude oil prices do right now, these are the factors that you need to consider. First factor is China. China won't grow at double digits now. It will grow in single digits. The second factor is that new technology has been developed over the years, such as fracking, shale oil, tar sands, offshore, renewable energy, directional drilling, geothermal, next-gen nuclear, etc. These new technologies have caused a change in the demand of crude oil and on the negative side. As we discussed, fuel-efficient cars will continue to hamper or reduce the overall demand of crude oil. There is no cooperation amongst OPEC members even today. And once again, OPEC will be redundant. Why? Because because Libya, Iraq will now do their own thing. There's a whole Shia and Sunni divide between the between the OPEC nations. And because of that, they do not trust each other and they are at war against each other. And they are outproducing crude oil amongst each other. There's a war amongst them as to who produces the most amount of crude oil. So OPEC is once again rendered the oligopoly no longer holds any value. The global demand has reduced because of the recession. Also, you can see that there's been hoarding and storing of crude oil over the next few years by countries. So, if you check the US crude oil inventories, which come out every Wednesday, those levels today are at levels which have not been seen for at least the last 80 years. US crude oil inventory has shot up so much that they are good to go for next 2 or 3 years. And similarly for other countries. And finally, the most ignored possibility is in the future we'll see electric cars. Hybrid models are already being tested today. So crude oil, which was earlier used as a bargaining weapon, sometimes even as a safe haven in times of war. Those days are gone. Crude oil demand, which has over the last 50 years, which has been on a increasing level, will now for the next few years be at a stagnant level, or it will grow very slowly. It will not. The demand will not grow very fast. And um, according to uh, Petronas and CEOs of many other global oil corporations, Petronas being Asia's largest oil corporation, it appears that crude oil will have to settle at a fair price, which would be near the 50 to $60 range, and it could remain in that range for 3 to 7 years. That is what is the view on crude oil as of today. That what will eventually happen as all these things normalize over the years to crude oil price. So this was the crude oil story officially as it is reported by everyone. Now we have a question, what about the less developed countries and some developing countries? Will their growth have any impact? Yes, Manish, like in the 80s, developing countries will favor from the low crude oil prices like India is. If you see on a couple of days back, the Indian trade deficit figures had come out and those figures were phenomenal. India is already benefiting from low crude oil prices and it will continue to benefit if crude stays in these levels for 3 to 7 years. So I've told you the official version of the crude oil story, but there is another theory floating around with respect to the entire energy sector. But that is a few people call it a conspiracy theory. I wouldn't call it a conspiracy theory because there is a lot of literature on the internet about this as well. But would you like to hear about this? Or is the official explanation enough for you guys? Okay, so the official explanation is enough, I guess, for all of you. So then, okay, two people are asking me to carry on. Okay, three people are saying that they want to hear about. Okay, practically. Okay, everyone wants to hear about it. So what I'll do is I'll give you all a break for 5 minutes. My throat is dry. I'll just have some water or something and then we'll start. Okay. Okay, guys, I'm back. Am I audible? Quick check. Or did my net drop? Yes, audible. Okay, let's proceed. Okay, then there's another theory floating around with respect to the entire energy sector. Could my mic quality be better? Actually, my friend, the mic is in the next webinar. I'll promise I'll get you a better mic. Currently, we'll have to use this. Okay. Um, there's another theory floating around with respect to the entire energy sector. That is, almost all OPEC suppliers are linked with some or the other terrorist activity. Now, I have not made any presentation for this. I have not made any slides for this. So, you will have to listen to me clearly because I don't want to go on the record with all these with slides of all this. So, you will have to listen to this theory very carefully. Almost all OPEC suppliers are linked with some or the other terrorist group or terrorist attacks right from the early 80s. Now, you remember I had told you about Saudi causing unrest in other countries? Do you remember that? We had discussed about how Saudi tries to control prices by causing unrest in other countries. Yes or no? Yes. That was the official reporter's way of saying that Saudi actually was associated with a lot of terrorist attacks which were happening in other countries. Okay. Similarly, this is not only for Saudi. All OPEC suppliers are linked with some or the other terrorist group or terrorist attack right from the early 80s. There have been terror-linked activities going on, unrest going on, which have since affected the crude oil prices. In 2015 alone, there were 386 terror attacks. There are terror brands which have been created. And when I say brands, they are actually brands like ISIS, which is the most famous one. Then there's Boko Haram, which is there in Nigeria. Then there's Al Shabaab, which is there in Somalia, or some of the other terror brands. In fact, when you search for terror brands, you will find a list of over 250 terror brands which are there globally operating as of today. Okay. Now here is the crux of the situation that these terror brands are funded majorly by these OPEC players and by US and its allies, namely Saudi, Kuwait, Qatar and UAE. Okay. You will find a lot of literature on all this. So even though people consider it to be a conspiracy theory, I would not consider it because there might be some amount of truth in this. In 2000 to 2005, we had also discussed that in US oil consumption was rising rapidly and in 2005 it peaked. Do you remember that? Yes or no? I need to know that you all are awake. Am I audible? Hello, hello, mic check. Alright. So in 2000, 2005, US oil consumption peaked. And what did George W. Bush do at that time? The only thing the only good thing George Bush ever did for the US economy was that he exploited Iraq for all the oil which Iraq had. And by that, the Iraqi oil was brought into US for almost free, and this is one thing which saved the US economy between 2000 and 2005. And right now, US has left Iraq because they have no use for the Iraqi oil anymore, since their domestic production has gone up and their consumption has reduced. So now this is a theory which nobody talks about, but it's a fact. Why would US leave Iraq if they have captured Iraqi oil mines and if they are exploiting it? Then why would they suddenly one fine day say that, okay, Iraq, now we feel pity for you and we'll leave you? That is not what happens. It's a full-fledged business deal where the Iraqi resources stopped adding value to the US. The domestic consumption had increased to levels at which the Iraqi production would no longer be an asset. In fact, maintaining the army base out there would incur a very large cost for the US. Are you getting it? So this is the other theory which is there for the crude oil entire sector, that terror-linked activities and all these unrest which have been going on have all been linked to some or the other OPEC nation or US and its allies. Now, uh, if I'm telling you that countries like US, Saudi and other OPEC countries are the ones who are funding these terror activities, okay, am I audible? Hello, hello. Yes, I'm audible. So if on one hand, if I'm telling you that countries like Saudi, Kuwait, Qatar, UAE, US are funding these terror-linked activities with respect to crude oil, then obviously the large margin which they earned when crude oil price was above 100, a big chunk of that went to fund these activities, no? Which then resulted in Iran, Iraq, Afghanistan, Libya, all these countries getting quashed, right? Isn't it a logical deduction that if Saudi is earning a huge margin and if Saudi is the one who is funding ISIS, so to say, then it will obviously mean that if crude oil is now at $30 per barrel, where will Saudi fund ISIS from? Are you getting it? These are not the countries that most suffer from terrorism. These are countries which cause the terrorism, Saudi, etc. They are the ones who fund all these terror brands to go and affect other countries. So the only thing that we can conclude is that low crude oil prices that are there are the biggest blow to these terror groups as it directly affects their funding. Wait a moment, am I going too fast? Let me explain. Okay, Saudi lowered its prices, reasons we discussed earlier. Okay, now what happened when Saudi lowered the crude oil prices? Crude oil prices crashed. Now Saudi's profit margins have been squeezed. Okay, so earlier Saudi and US were jointly funding the ISI. Okay, but now Saudi has got a very big squeeze. Saudi has got a very big squeeze in the profit margin, right? Because the crude prices have crashed. So now where will Saudi fund the ISIS from? Are you understanding the question? Yes or no? Yes. Now let's have a look at Russia. Okay. When Saudi started lowering the crude oil prices, what did Russia do? If you were to go back in the news, you can see that Russia gave a twofold reaction. Firstly, in February 2015, Russia secured Ukraine boundaries and put its military in the Ukraine boundary. Do you remember that? Because of which entire Europe had got angry and they had uh, told Russia that we will stop doing business with you, etc., etc. Russia had deployed its military in the Ukraine and secured the Ukraine boundary. Do you remember that? And the second reaction which Russia did was it put its military base in the Mediterranean Sea next to Syria. These are two very important things which Russia has done since Saudi has lowered the price. This is the direct reaction of Russia to Saudi's move of crashing crude oil prices. Okay. Now, why did Russia do this? Let us think for a minute. Why did Russia do this? As we had discussed earlier, that 70% of Russia income comes with exporting crude and natural gas, right? Now, where does Russia's crude and natural gas go? Russia's natural gas export goes to Europe, and 30% of entire Europe's natural gas comes from Russia. Okay. Now, and this natural gas goes through three pipelines which pass through Ukraine. So if any terror attack were to happen on Ukraine, Russia would lose its business of selling natural gas to Europe, which it cannot afford. Especially with the low crude prices, Russia cannot afford to lose a single amount of business from Europe. And that is why it first secured its natural gas business by putting its army in Ukraine. So far so clear? Yes or no? Am I audible? Are you listening? Is it clear so far? Not audible. Just give me a minute. Okay, I think I should be audible now. Am I audible now? Yes? Alright, cool. So, as I was saying, that Russia gave two reactions to Saudi's lowering of crude oil prices. What were those two reactions? Firstly, it secured the Ukraine boundary and it it put its military force on the Ukraine border. And secondly, it put a military base in the Mediterranean Sea right outside Syria. Okay. Now, why did Russia do this? Firstly, Russia provides natural gas to 30% of Europe. Europe is Russia's largest customer for natural gas. So if any terror attack would happen to Ukraine from where three pipelines go to Europe, which containing the natural gas which Russia is exporting. 3 pipelines are going to Europe from Ukraine. So if any terrorist attack happens to Ukraine, Russia will lose its natural gas business, which it cannot afford to do at low prices of crude oil. Are you understanding? Now am I clear? Yeah. The second thing, why did Russia do the Syria thing? Because if you were to check the world map, okay, Syria is located in such a place that it is a strategic location for sending an oil pipeline in Europe. Okay. So if you were to see Syria on the world map, it comes right in between Saudi, Turkey, Iran, Iraq. Wait, let me see if I can find the world map for you containing Syria. Yeah, I'm not getting any world map. Okay, yeah, I think I've got recent one. Okay, can you see my screen? I've put some kind of a map out here. You can see that Syria is located in a very sweet spot. Okay, now here if you see that if Saudi wants to send uh, oil to Europe, okay, through a pipeline, the pipeline has to pass through Syria because Iraq is its enemy. Okay. Similarly, if Iran and Iraq want to send an oil pipeline to Europe, then they have to do it through Syria. Okay. So what Russia is doing is Saudi is actually pushing for an oil pipeline to Europe. Okay. And Russia is tied up with Iran and Iraq and is pushing for an oil pipeline through Europe through Syria. So Syria is in a very sweet spot where both the countries are trying to capture it so that they can send oil to Europe. Okay. Is it clear so far? Yes. So the second reaction was, so now what ISIS is trying to do is in Syria, oil fields are located on the northern Syrian region. So ISIS first was deployed by Saudi and US combined. Okay. ISIS went and captured those oil fields. Okay. Thus crippling Syria. Syria is an economy which is heavily dependent on crude oil exports, and so if ISIS has captured their crude oil, Syria has become a cripple. So when Russia put its military base in Syria, they did that to remove ISIS from there. Because if Syria would get crippled, then Saudi would arm twist Syria into putting a pipeline to Europe through Syria. And Russia wants to do the same thing to Syria with the help of Iran and Iraq. Okay. Now the game is very interesting when you see it from this angle. So what else did Russia do? If you want to check the history, Russia, as I told you, it provides 30% of Europe's entire entire natural gas is given by Russia. Okay. So in the past, Russia had a tiff with the UK. Okay, where UK had imposed sanctions on Russia and said that we will stop doing business with you. So what Russia did was, in winter, it stopped providing natural gas to Ukraine for entire 2 months. To UK, not Ukraine, sorry, to UK. UK as a country has very less natural gas storage. In the entire country, they can store only 15 days worth of natural gas. So if Russia cuts the natural gas supply to the UK people are going to freeze. And this happened to them in 2009 when they argued with Russia. So this time, when Russia put its army in Syria and when Russia put its army on the Ukraine border, entire Europe rebelled against Russia, said that we'll impose sanctions on you. All Russia did was that, boss, winter is coming and I will not give you a drop of natural gas. And you will be freezing. Okay. And now what Russia wants to do is not only control 30% of Europe's natural gas supply, but it also wants to control all of Europe's crude oil supply by sending crude oil through a pipeline in Europe through Syria. Do you understand the game that Russia is trying to play now? And this entire game is now Russia versus Saudi for sending crude oil to Europe. Are you understanding? Yes. Also, what Russia did was, Russia again arm twisted the UK that I will not provide you natural gas if you support the ISIS in any way. And also, you have to say that um, uh, Russia asked the UK to arm twist the US into not supporting the ISIS too. So eventually what happened was, US backed out from funding the ISIS because of UK's insistence. If you see historically in all wars, etc., UK and US are very strategic partners and they do all the things alike. So if UK told the US that, boss, please don't support the ISIS in any way, UK immediately backed out, and now Saudi is left taming a white elephant. Saudi has to pay for its people and pay the ISIS and bear the brunt of low crude oil prices. Are you understanding? Is it clear what a spot has been created for Saudi? So because of this, the Saudi budget and what we already discussed is a very rosy picture which the Saudi government is painting for us. It cannot be believed at the face of it. Okay. So now we have a question. A friend has not understood why Russian military is there in Syria. So ISIS has captured northern Syrian oil mines. Okay. And ISIS, Russia wanted to move ISIS out of Syria, and that's why it placed its military base in the Mediterranean Sea right outside Syria to attack on northern Syria, to attack on ISIS and make ISIS exit from Syria. Okay. Russia also has good relation with the current government in Syria. Yes, it does. So basically, UK, US funded ISIS along with Saudi. UK, US backed out. Saudi stuck on its own. And now you consider the Saudi economic situation, it's a whole new picture. Okay. Now what has the ISIS been doing in Syria? ISIS captured the North Syrian mines and sold its oil to the Syrian government itself. Why? Because Syria is an oil exporter and Syria needs to export oil for its economy. And ISIS is also now, since Saudi is not paying ISIS on time or is not able to pay the same amount of funds to ISIS, ISIS has started infiltrating into other nations and creating a further nuisance. Okay. So now the question is, what is Russia's plan? What is Russia's plan now? So Russian bombing of North Syria are aimed at driving the ISIS further south. Okay. And if the ISIS exits from North Syria, they'll go in South Syria, and then when the Russians bomb South Syria, they will go into Saudi. Okay. So how ISIS operates is, if Saudi is funding them, well and good. If Saudi is not funding them, they'll find, capture the nearest oil mine, oil rig. They'll sell that oil and fund itself. So if ISIS enters Saudi, they will capture some Saudi oil mine and start selling oil to Saudi itself because Saudi cannot pay it anymore. So in effect, Russia is trying to give Saudi a taste of its own medicine and complete the entire circle for Saudi in that sense. And carving a clean way for Russia to enter Europe crude oil market. Russia is trying to be the one whole and sole supplier of crude oil and natural gas for Europe. So when you consider this story, the game is very big, the stakes are very high. And low crude oil prices are leading to a money cutoff for the terror groups. So now the race is, can Russia fight on till it wins or will Saudi win? That is the question. The entire question has been changed. Right from OPEC to non-OPEC, now we have drawn down the game has entirely changed to a battle between Russia and Saudi. This is the theory that I wanted you guys to understand. Have you understood the theory now? Yes. Now, what is the current status of Syria and of Russia? The news hasn't come out since many days. You need to track it actively. So let me tell you, Russia has succeeded in two things. Russia has bombed North Syria so much that entire northern Syrian region has been evacuated. Even the Syrian population has left North Syria. ISIS has started fleeing from North Syria, number one. Number two, few ISIS people have now have also become converted and now they are fighting for the Russians and for Assad, who is the government of Syria, against the Saudi people. So uh, IS has been ISIS has been affected in two ways. Firstly, they have been bombed and beaten badly. Secondly, they have now started being converted and they are fighting against their own bosses. Why? Because the Saudi is not funding them anymore anyway. So what are they going to do? So at the point we feel that Russia is winning the battle which is there, because until the winter ends, no one from entire Europe will intervene in what Russia is doing in Syria, because Russia will then stop providing them natural gas. Russia has got a clean chit until the winter ends, which is just in a month or two. So this was the conspiracy theory regarding the crude oil story. I have told you both the aspects what the official people are saying and the unofficial people are saying, the grey matter, the dark matter and the white matter. Now it is for you to sit and figure out what exactly is the real situation. But be rest assured, you will find a lot of dope on the internet about even the conspiracy part of it. So uh, with that, I complete my presentation. I'm open to questions. So question is, one of the major reasons causing this oil slump is increase in supply. How persistent is this supply shift likely to be? My friend, I spoke about all the factors which are affecting the supply and the demand. So people are saying that crude prices will stabilize around 50 to $60 per barrel. Can't ISIS move to Iraq? ISIS can move to Iraq, but Russia is there. Russia is Iraq's major ally. It will not let ISIS move to Iraq. Any other questions? I could not hear the effect of terrorist attack on the prices. All I have been saying is since the 80s, the Saudi has been causing unrest. That is another word for terrorist activities in other countries so that they can drive up the crude prices. So Saudi terrorists would go and capture the oil mines of other countries. US also did a similar thing by going and capturing the oil mines of Iraq. Similarly, there was a war against Saddam Hussein of Iran. So all these activities have always kept on going on. So the oil prices were controlled because of these terrorist activities, and so that other oil supplying countries would not supply crude oil, giving Saudi and UAE, Kuwait, all these countries who caused the terrorist activities the upper hand. Getting it? Okay, 1 minute. For a big message from one of you. I just read today that US reserves has been more than expected, and also Qatar is inviting OPEC countries on April to put a cap in oil prices, but Iran is arguing that they need to boost output further. This OPEC fight has been going on every month. In fact, even Saudi and Russia met and decided to control oil prices. But all these are pointless hassles because, as you said, Iraq are not going to stop their oil production. So if such would be the approach of oil exporting countries, is it possible to get a stable price anytime soon? Yes, see, they would all act stupid for a while until it really pains them hard, but they will have to stabilize the price at a level at which their profit margins are enough to sustain themselves. So it is any man's guess as to what that will happen. Will shale come back in a picture, and what if they develop a cheaper technology? It is very difficult for shale to come back in the picture because apart from all this, the environmental ramifications of shale oil were also being opposed in the UN as we speak. So I cannot comment whether shale will come back soon, but definitely they are gone for a long time. If they develop a cheaper technology, they are bound to come. Can you summarize the crude prices effects on the Indian economy for the next 5 years? My friend, India's major import is crude oil. If India's major import has been slashed to 30%, then India's trade balance will get affected in a very, very positive manner. And even if crude stabilizes at 50 to $60 per barrel, if you were to talk to any person who is in the shipping sector right now, that person will tell you that at present, India and all countries are importing a large amount of crude oil. They are taking an advantage of the supply glut, advantage of the prices not being able to rise, and they are importing loads of crude. In fact, a shipping person told me that normally a small oil tanker was being imported. Today, all companies are importing the largest oil tanker capacity which can carry 3 times amount of crude oil. That is being in demand today. That ship is come back in demand. So when you talk to other industry people, they will tell you that India is also storing up, loading up on its crude oil capacities in such a way that over the next 5 years, the crude prices will not affect the Indian economy in any way, and the lesser the better will be the situation. India is in a particularly sweet spot. So, Indian economy will not be badly affected by crude oil prices at all. Role of Canada, they are the second highest reserve of oil after Saudi Arabia. Well, Canada is one of the major reasons why oil prices are low, because Canada is also not willing to drop down its production. You said that 90% of revenue for Saudi comes from crude oil. As there is a sharp decline in their economy, then is there any laying off of employees? I'm not aware of Saudi employee situation, but if you hear, Saudi investments in the Saudi region have now stopped. People have stopped investing in the Saudi region. Even the Saudi sheikhs are looking to invest in other regions. In fact, someone told me that Saudi sheikhs are looking to invest in India now for growing their money rather than in Saudi and Dubai itself. So that is the ground situation on Saudi of all the sources which I have. But what about the forward contracts already entered by India before the rate cut? So those forward contracts obviously will come into play, but that does not stop on India loading up on crude oil for the years to come. So have all the questions been cleared? Have you got any further questions? Kindly reply with yes or no so that then we can conclude the webinar. No questions. Okay, I hope you liked today's webinar. If you did, please provide us with a feedback. You will get a feedback form in your email. Our next webinar is on Friday. It's on the Chinese economy and on the Chinese crash. I hope you guys will be there, and I promise from my end there will be a better mic. This Chinese mic has clearly given away. So with that, I'm signing off for tonight. Please come on Friday and please give us your genuine feedback with regards to today's session. Okay, thank you very much, guys. Yeah, we've got around 40 people listening today.